Yo, what it do, you guys? Hope everybody's doing well. Today we have another stream, and I really want you guys to get active in this comment in this chat. I want to make sure that I'm giving y'all the due diligence and the space to be able to leave comments, and we can do a Q&A. So today I really want to come in and talk about the concept of these interest rates and how it's going so far. We haven't talked about it in a while. And with that being said, we have some inflation information that's coming through. But then again, I also want to kind of segue and dive into a research report done by the CME group. And they're basically giving us some analytics. I love the analytics. I love the data. And I know a lot of other YouTube channels, they don't go through this stuff in depth. Now, I want to try to get this done within an hour. So let's get it. I appreciate y'all. Yes, we are live. So we in this thing. And I'm excited to be here because we're in a beautiful part in the market where really, truthfully, there's opportunity. Like there's opportunity to be had if you know what to look for and how to go about it. And so we're taking a little break from the Chart Master series, which we've already done 2 episodes. Wade, what's good? With that being said, I'm going to continue the rest of that in the Patreon. So y'all got a taste, which is jam-packed with a lot of great information for those that are trying to get better at learning how to do the basics of charting. We're going to go through some more intermediate and advanced type concepts in the Patreon. And so, 2 we're done here on YouTube. I'm going to do the other 8 once again for those that are kind of in our group in the Patreon. So with that being said, we'll go through and continue on. We have some information today. Currently, inflation. We have a reading of 3% for June. Now, the expectation, the forecast was 3.1, and so this is a surprise. So it's an undershoot from what the market was thinking, which is generally good. Now, the interesting thing, I'm just like, man, they're playing with us. They're manufacturing this, which I really think, this is a basket of readings on several sectors of where things are being tracked on an inflation front that they choose, and they kind of change the weighting and all this kind of stuff. I really think that inflation is not even 3% on a yearly basis. I think it's more like a 2%, but they're trying to hold it in the 3s because they don't want to put something that says 2 just quite yet, because they don't want to go down on those interest rates just quite yet. Like, we want to look at this over a 5-year basis. We were at 3% before, so we were at 3.1% in November of 2023, and even in January 2024 we're at 3.1%. But then we have like these moments of times where, all right, then we're gonna go back up, and then we come back down, and then it's like, come on, really, all these little small fluctuations going back up? Nah, I really think that this thing is just continuing to trickle down. And then here in June, because you look at the construction of how the charts are looking for a lot of the assets within different markets, this is a time where, like, they kind of went stagnant and sideways because of this indecision here, and they're like, hold on, time out. Like, markets are doing too well in Q1 or Q2 of 2023. We gotta just keep some things in the reins before things just go too crazy. And they did that. But the market is gonna sniff things out. We really think we'll look at the probabilities. I really think that in September, that's actually the first legitimate. And I've been on the camp of saying, like, I think that this interest rate ain't gonna get cut for like a good bit of time. A lot of people have been trying to say that we're gonna have like 5 interest rate cuts this year. I'm like, yeah, we'll be lucky if we get 2. So maybe September. I think there's like a 50-50 chance for September, but we can probably solidify for sure. In my eyes, from my analysis, 1 in 2024, that is going to happen. Now, 2025, that'll leave us in a different conversation. So we've stagnated out on this interest rate currently. I'm sorry, not the interest rate, on this inflation, which, we need to see this thing kind of jump into the 2s, which may be in deep 2025 before that happens. But once again, the mandate for the Federal Reserve is to say, hey, they're looking at price stability and making sure that inflation is maintained, and they need to see data that's going to ensure that it stays down there. But they're looking at lagging indicators anyway. So, I'm not really paying too much attention to them, but we do need to also pay attention to them, if that makes sense. Not like on every single word that they're saying, but just in the back of our mind, in the back of our analysis, constantly like, hey, what is that guy Jerome doing these days? Like, see, what does he got going? So in 20 days, we're going to have the FOMC meeting. So if we want to pull up the Fed Watch tool once again, so let's see if we can pull that up, CME Group, and we're going to look at a research report by these same guys here. We got to understand that they are one of the largest capital markets as far as making sure that we can do these transactions, for stocks, but even, Bitcoin and soon to be Ethereum, they're going to be able to have some things going with the ETF for Ethereum. So, and we'll jump back in and talk about this. So for this, meeting here in 20 days, 91% chance that we're going to keep it the same. Let's jump to September. Now, these numbers have changed, right? Like this number was lower just a couple days ago when I pulled this up. It was like 74% chance. We brought it up to 84% chance that we'll go down 25 basis points. Now, let's kind of look at a couple of things. The probabilities chart. And I want to kind of pull your attention down to the CME Fed Watch tool, the aggregated meeting probabilities. Now, this is an aggregate, basically saying they're taking a measure from many different spaces and putting it all together. And so we see that stair step, similar to how we see it here, but like, look at some of these percentages, 99% for the month of September 18th, that we're going to get that jump down on the interest rate. This literally changed this morning. This was like 60 some percent, and it just popped up to 99% all in one day because inflation is like really actually going down, and they can't hide it for too much longer. So the market is sniffing that out. But once again, by the time that we get to the end of the year, December, 5% ain't even an option. 5.5% ain't even an option. We're only, really looking at 4.5% to 4.75% as potential options for the end of the year. So that's, half a point. That I'll take that. That's the beginning of setting us up for a very, very nice 2025. We may have some volatility in between that time to get things figured out, but 2025, we're teeing it up for 2025, and that's the key. So pretty dope. Let's take a look and see what Bitcoin is doing briefly. So we'll pull up Bitcoin, still chilling right below 58K. And let's see what we got. BTC. So we got this thing trying to make a little durable low. I did a video for the folks in the Telegram, or actually a actual image with context, talking about where we're at. So I'll share a little bit of that with y'all. So we are battling two trend lines. We have a wedge, and we'll see which one gets broken. That's going to give us the momentum for the rest of the summer. If we break this top line, there's a good chance that we'll come back in this range for the summer. We break this bottom trend line here, there's a good chance that we may trend below this bit of support that we have here, which is just at, let me see if I can pull out the price for it. So this support right here, it looks to be just about like $56,685. So we break this trend line, there's a chance that we're gonna stay below this, and that'll be a little bit of resistance on the way back up at some time in the future. But yeah, this is on the 3-day chart, looking on the daily chart on the fear and greed, and we got the Hatter up. So we have popped below. So we got down to levels that we have not seen really since, we're talking September 2023. And if you want to compare that, September 2023, where we got this low on the fear and greed metric on the daily chart, that was an incredible time to DCA because we had a nice expansion after that. And then, even before that, when was the last time that we've been this low on the fear and greed metric? Shoot. We're talking the low of the cycle. So even simple analysis like this can show you that anytime that we're this low on the fear and greed, and we're talking about like how low are we got down to a level of 5, and we're currently sitting at 22. So we're just only a few days removed from that reading of 5. Yeah, we're in territory, and we're getting the Hatter popping off these buy signals for us. This is what smart, savvy investing looks like. So if nobody told you, hey, consider looking at crypto instead of being a top buyer, buying up here at 70K, 68K, 57 and some change is a lot better in the relevant time period that we're talking about, And so much lower risk level if you're DCing now versus 3 months ago. So very, very important thing to recognize. If y'all can't tell, I got the Green Bay Packers shirt. It's one of my old shirts that I was training in when I was playing for them. But y'all get a chance to kind of see a little bit of the gear that I got. So anyways, Bitcoin is looking pretty healthy simply because we see a good amount of support now. It's kind of getting held and it's not making its way across that 12-day moving average. Something I'm gonna be looking for over the next week is to see, okay, do we have a green candle that is breaking through this 12-day EMA? And are we able to sustain it for at least 2 or 3 days after that? That's going to give us a good sign that we'll be able to probably break this top trend line. And then we can start to attack this 100-day moving average. And so, what does that look like? I would say this 100-day moving average will probably continue to have a little bit of a downslope. But we're really, really trying to test the range. Let's put that in orange. Really trying to test the range for the midpoint of this price action. And the easy way to find a midpoint is very simple. You kind of come here, make a parallel channel. So you take the top end, you come across, and then you come and you get the bottom end. And so the midpoint is going to be this dotted line here in the middle. So we kind of extrapolate that out. Let's maybe put that out maybe a couple weeks. So let's bring that into potentially the beginning of August. And so what we're looking for is a break of the 12-day EMA. Then we'll go ahead and attack, this level here, which is the 100-day moving average. And then our goal is to say, okay, cool. Like, can we sustain ourselves past the midpoint? Because you see, it gets interacted with a lot. Like this batch of, price action here, it held that support here. It, had an undershoot and an overshoot. So seesawed on it here, had resistance here. And, it tried to keep support here, but then it broke through and there's a little bit of resistance currently here. So those are the steps. Step 1, step 2, and then step 3. If we get past this level, so this midline is what we're really looking for. So $64,000, just expect for us to be at all-time highs in short order after that. And then the next batch of resistance obviously is going to be the all-time high. So that's kind of what you got to think about in the time to come. If we are going to be bullish for this summer, we will find out. On the bottom side, let's kind of take a look at what that looks like. Where could we potentially go? If we want to take just a Fibonacci, so from this price movement here, and once again, now I'm bringing out some intermediate concepts that are fully explained in the Chart Master series, especially if you're in the Patreon. But I'll do it here on stream. Yeah, we could definitely easily come back to this batch liquidity here and come back down to the golden ratio. That's pretty normal in a bull run when you regress off of a large move like how we had from January 2024 to March over a span of 2 months. So that's a time to kind of recollect yourself as we kind of reload to try to make another lunge. And so that price target we'll be looking at about like 50K. And I would venture to say like, hey, a lot of people, if we go below 50K, there's gonna be so many people licking their chops. Institutions that are like, oh yeah, BlackRock gonna eat up even more because they've come back to play to really try to get a lot of these discounted Bitcoins compared to where they were buying 2 months ago. And they've actually started up with their activity buying a little bit more because they were kind of chilling over the past couple months. BlackRock and Fidelity, they hadn't been buying so much Bitcoin. So, but they've started buying that back up again into the dumpage from potentially we're talking Mt. Gox, and then also potentially with what we're talking about with Germany and their dumpage. So things to kind of think of. We got some buy signals for the Hatter. Oh man, you gotta love this Hatter. So yeah, so there's that. So we got Bitcoin out the way. Now let's check for questions. What do y'all have for me? I know y'all got something. Let's make that money. Let's make that money. I gotta put that back up. Let's make that money, because look y'all, that's what we're here to do. That's what we're here to do. And if you have any other objective, then I'm not quite sure why you're investing, right? We're trying to preserve money, make money, and really get the butter from the duck. BFD gang is what it's all about. So what do y'all feel? Where do y'all think price is gonna go? Like, truthfully, do you guys think price is going north or south? Or is it gonna go east? Unfortunately, there is no going west. So we can't go back in history. So we can only go east. What y'all think? Let me see. Mm-hmm. Yeah. Um, I mean, there's some things that we can do to kind of extrapolate some things. Let me take out the probability indicator. Let me see. What am I looking for? Wade says, yeah, east to north. Yeah, I think, yeah, my bias right now is a little bit more bullish than anything, simply because Ethereum ETFs are potentially going to be able to launch this month. And so I think that'll be helpful. I'm looking for a specific indicator, which I think, let me see here. Yeah, let's put that on. Let's look at some probabilities here. All right. So off of these two candles, what are we looking at? We're looking at a couple probabilities, and from what this is telling us, you know, a 55% chance that we'll, maybe attack and test these wicks here for these two candles. And then that dwindles down the lower that we go. And a 31% chance. And the reason why this is because the price is actually closer to this wick than this wick. That's how this gets calculated. Um, and as of right now, like, we got to see how this closes for the day. That odd improves if we close maybe a little bit higher towards the 12-day EMA. I don't know. We'll find out, on the close. But as of right now, is leaning a little bit bearish off of this, these last two candles. So that's the data that it's taken. I would venture to say, from looking at this wick here, so, because wicks, they do mean something, like that. They do tell us a story. Looking at this wick here of how that got bought up so quick, and looking at how that got bought up so quick and then reversed from this wick, that's kind of telling me, like, really, like, down here for sure, there's buyers that do like Bitcoin at that level, because we didn't spend a day where we closed down there. And that's something to remember, when you're kind of looking at the construction of a chart. These wicks do tell a story. So just like, a lot of these pivot points where you see wicks to the downside that are a little bit larger, like here and here, those typically are areas that maybe don't get tested for a little bit of time. Like, how we went up from there, and then we went up from there. Now, and that's just talking about like the immediate future. We're not talking about, a month later, because once again, we did make a lower low, but in the next, 4 to 7 days, we were up from those scenarios. Same thing like wicks like here. So something to intake if we want to look at a volume fixed profile from just the batch of liquidity from here to here. Whoops, sorry. Let me redo that. So we're going from here to here. There's a lot of interaction, like way up higher at about 67K. There's a little bit less interaction. So, this is kind of like a little bit more of a discovery, where the market really needs to decide, versus, hey, there's like real legitimate support and resistance, like how, there's a lot of price action up here. So we'll see. And what that look like, that's the fish. I'm going fishing. Man, I did some DCAs earlier today. Oh, man, I got some great deals on some coins out there. With the sample portfolio on the Patreon. So, yeah, like, I mean, I'm fishing. I'm definitely fishing. I don't know about y'all, but I'm fishing. And we really can see this start to show us what's going to really happen. Really, over like the next like 20 to 30 days, we're really going to get a chance to identify how the rest of the summer is going to go. Really, once we get outside of July, when we hit August, we'll kind of see, what's what. Because we'll know if the ETFs are doing what they're potentially going to do for Ethereum and Bitcoin at the same time, and all that jazz. So that's a little basic TA on Bitcoin. We'll keep checking in the next stream. So let's get into this report. So I mean, this is very meaty. There's a lot of data in here. I don't think I have enough time to share everything. Y'all put y'all's questions in. So I just seen this one here. So is this retraction a result of making a new all-time high near the halving? I think it's a retraction just simply because of the expansion of price of how quickly it was. I don't think it has so much to do with the halving. I just think this is just normal price action. When something goes up 200%, like how it did from January to March, so 2 months, that's 60 days. Yeah, you're gonna have maybe 60 to 90 to even 120 days of downside action simply because how quick you went up. And we're not in a liquidity rich market currently. I did a whole breakdown on global liquidity in the Patreon, which, it really helps us understand the dynamics of why price moves the way it does. Because a lot of people are like, well, why didn't we just keep going up? Well, you've got to look at the global liquidity. And there's factors with that, with credit being what it is. We're growing in credit, but it's not expanding like how it was in 2020 and 2021. So, those are some reasons of why we have retracements. There's many factors to it. Now, with this report, the CME group, we're going to look at the digital asset space and look at the market analysis. So for the first half, so half one of 2024. So this is fresh, hot off the press. This is a group where they have literally, we're talking about decades of experience analyzing markets. Obviously, with stocks for a very long time, but they've been in the cryptocurrency space, for a very long time as well, and really having a really good grasp and handle on the derivative space. Now, I love the derivative space because yes, it's paper on paper, but at the same time, we see how people go about their investor sentiment, because when you don't take as much risk, you kind of do certain things. Because when you're not buying spot, you can protect yourself with options, essentially. And so we can kind of look at the derivative space and how people are using leverage and available credit to our advantage when we are buying spot, because there's certain things that we see as trends. So that's kind of what that introduction is explaining, by the way. So, we've got a lot of skillful people that contributed to this that we'll kind of go through and get down to some of the meat. I'm going to stop periodically, ask a few questions. If y'all have any thoughts, concerns, ideas, let me know. Now in this, yes, they do focus on, talking about what they do offer. So, they do offer things outside of just, Bitcoin and Ethereum. CME reference rates are available for the following cryptocurrencies. So, we're talking about Solana, other things that are a little bit more on the DeFi side of stuff, of Avalanche and Aave, stuff like that, synthetics. So, this is a broad-based piece of information. So I'm going to try to not be long-winded on the tooth. I'm going to be direct, straight to the point, get the meat out of this. And also we need to conceptualize what are we even reading? So the key is this. We have expanded in the space. So the landscape of the digital asset space has expanded, which is key. Let me see if I could turn this on that way. I could highlight a few things for us. So we've expanded. So we're going to get a good overview of what this is looking like. Let me see. All right. So, okay. I'm not logged into it. All right. We'll worry about that later. So with that being said, here, let me make sure I get this out the way. One sec, y'all. We'll redo that. Cool. All right. So there has been expansion in the market, and we're talking about November of 2022 to now. So less than 2 years. We're talking a year and 8 months, give or take, somewhere in there. So we have had growth in Bitcoin, growth in market capitalization, the altcoin performance. And, some people are like, hey, why are the altcoins not in market capitalization tracking with Bitcoin? Well, the key is this. This is how it always goes in the cycle, where altcoins, they may lag behind it in market growth, but percentage wise, we do have some coins that are outpacing Bitcoin in a percentage gain. But what we're really looking for is when this eclipses Bitcoin, and that typically happens in the last quarter of the bull run. It's like the last 3 to 4 months of the actual bull run. Or trust me, we're gonna know because we're gonna feel it as investors and we're gonna see it on the chart when the market capitalization is like, this is going to be like the Ferrari just taking off, and Bitcoin at that moment in time is going to be the Toyota. Still doing okay. It's going to be reliable, but this ain't going to be going as quick as these altcoins. So a lot of money coming through to the space. It has increased over $1.1 trillion, which is a lot. So as we continue through, we'll look at, the asset market caps, so we got, currently right now, $1.3 trillion for Bitcoin, the altcoins excluding Ethereum. Yeah, we're sitting pretty nicely as well. What is that looking like? I would say, so that's looking like a little bit over $1 trillion. Ethereum by itself is at $451 billion in stablecoins. Now, this is what we need to think about is expansion of stablecoins. In the crypto world, that's the same exact thing as with the M2 increasing on, like, for example, the United States. When the M2 increases, the money supply, that's a good thing for traditional markets. It's the same thing here in crypto. So when the stablecoin market cap increases, because the only way that can increase, there's no like volatility because of trading. It only increases when people give deposits to the stablecoin issuers, and then they can create new stablecoins. So we've done streams about that in the past. So that is a good thing. And we want to see this continue to trickle up. Like, we can look at that on the chart and put all of the stablecoins together. We're talking now BUSD because the SEC, they're no longer like suing them anymore. But we're talking Tether. We're talking USDC. Those two mainly. When those are, getting new inflows of deposits, those market caps go up. They have no choice but to find their home inside of an actual cryptocurrency at some point. A lot of times people will try to go for the yield, but as the market heats up, they're going to say, hey, why would I want to get only just 4.5%, 5%, or 6% in yield when the market is telling me, hey, we're risk on and I can go and get 40, 50, 60% on some coins in a matter of like a couple of weeks, whatever the case may be. So growth. We're in the middle of the bull run, so that's key. Now, dominance is the thing. I'm going to skip this for now. Obviously dominance is something that we do monitor. I think it's a little bit less important where, Bitcoin's going to lead in dominance, but all in all, the key thing is this: is there growth overall? And the answer is yes. We don't need to get into the semantics of, where's the dominance for Bitcoin and the altcoins and all that. Look at these ratios. That's for another stream. Key thing is this. Now, net capital change. Now, I've popped this on many times in previous streams. Let's read this paragraph. So the digital assets display an internal market cycle. Okay, so as capital rotates through various sectors of the market over time, we can model these capital rotations using on-chain data. Thank you, Glassnode, measuring the 30-day change in capital flows into Bitcoin, Ethereum, and the change into total stablecoin supplies. Okay. So once again, Bitcoin is in orange, Ethereum in blue, stablecoins in green. Now, historically, capital trends to migrate towards Bitcoin as the largest asset during the market downturn. So people go for protection. Like when the market is going down, they're like, oh, snap, let me just get to Bitcoin. And during the intermediate recovery from them, as investor confidence in the industry builds. So how does investor confidence build? One, with Bitcoin going up in market capitalization, but then also two, where there's more money accessible to borrow, where leverage is easier to get, and people are going to pile that in, make some money off that, then that just brings more confidence. So things of that nature. So capital has historically rotated down to Ethereum and then further out to the risk curve later in the bull market trend. That's why I talked about the altcoins. Yeah, they may trend below Bitcoin at first in market capitalization, but they will zoom past it because of this capital rotation, like how we're discussing here. Now, stable coins have emerged as a preferred quote currency on both centralized and decentralized exchanges. As such, the growth in total stablecoin capital can provide a proxy for demand further out on the risk curve. So the way that we can really read this is the capital rotation for Bitcoin, then Ethereum, then the altcoin market capitalization. And one thing that is consistent when Bitcoin is really getting rocking and rolling, we find that Ethereum tracks. So it kind of comes up, and then you see like this big old liquidity push, how it rotates from Bitcoin to Ethereum here. But then also, even though it's larger or like smaller in actual capital that's going into it, it has a major effect on these smaller market cap coins, because these percentages, go flying. And on a net basis, you're going to get higher returns, even if it's lower capital going into them. So same thing here. We kind of experienced that. Well, Bitcoin had a really big push, then Ethereum came, and then the alts came. And so we're kind of in that mode where, capital is dwindling out of Bitcoin. Everything's kind of chilling out for now. But once again, when we see that sustained capital rotation, we're going to get another push of liquidity going to the altcoins. So that's going to be a beautiful thing if you hold them now. That's the key. You got to hold the asset before the actual liquidity goes into them to get the gains. So this is a very helpful piece of information to look at this capital rotation. And we'll go past the issuance because that's where we get into the weeds. Settlement, volume, once again, getting into the weeds, we'll go to. And this is something that I'm going to leave this in the chat for you guys. So if you guys are into that and you want to go through this whole report, it's 45 pages. I kind of want to go through some of the more simple stuff, some more basic stuff to kind of give us an idea of how the CME group is analyzing this market. On-chain deposits, once again, getting into the weeds. Hash price, getting into the weeds. The difficulty of mining a block for Bitcoin, getting into the weeds. All right, now this is one that we can look at. Let me put this. Let me make sure y'all have this link before I forget. Or you know what? Time out. I'll put this in at the end of the video. So, and it's going to be in the Patreon as well. Now, with this being said, let's talk about the Bitcoin price performance based upon after the halving. That's something that somebody just asked, right? So Pepe Flex was asking about this. Hey, are we having a retracement because of the halving? Now, we have scenarios where, that has happened, but we also have scenarios where we've gone up. So let's kind of get this in a little bit larger font. Now, let's read this. The halving events represent a widely observed event. So everybody typically looks at this and says, all right, what's going to happen? Is Bitcoin going to go up yet? Are we going to become millionaires in a month? Now, as you know, we need time. Even with the halving being a structural event for Bitcoin, where, the block reward is cut in half for the miner that mines it. Now, that raises the difficulty to even mine the blocks as well. So if we look at the Bitcoin calendar, both due to its reflection of the programmatic scarcity of the asset and from the market performance standpoint, which has historically followed halving events, the chart below shows the index performance over the 365 days following the last 4 halvings. So we're not just looking at 1 halving or 2. We're looking at 4. So 3 prior and the one that we currently just experienced. So in blue, we're looking at the 2016 halving. In green, we're looking at the 2020 halving. I really think those are going to be our 2 best base case, because here in orange, that's like the first halving. That's like, that's when volatility was immaculate. TradFi wasn't even in crypto really like that. And so we really want to use these other 2 case studies to give us a little bit more realistic, not expectation, but analysis. Okay. So what we can see is both prior cycles experienced a period of several months of relatively quiet performance following the halving before experiencing a remarkable peak returns of 350 and 665% respectively. So now let's put that in context. From the price of the halving. The price of the halving was kind of like similar to where you are now. So let's look at that. Let's do a little bit of math here. Let me pull out the trusty dusty calculator just to make sure I get it right. So if we're talking about a 350% gain, and let's say we don't even do that, but let me just kind of make it make sense. We'll choose the smaller number. A 350% gain on $58,000. That's an additional $203,000. So let's kind of add $58,000 to that. So if we did something like how we did even last cycle, that would put us at a nice $260,000 for Bitcoin. And we had a muted cycle, right? We had a period of time where China was like, oh, no, right there in the middle of us just like killing it. They're like, look, we're going to ban all crypto mining in China, right? And they crushed it for a little bit, but it came back, because we still had a lot of leverage that people were taking to keep pushing us up after that summer in 2021. So let's say we don't even do that. Let's say we do something a little bit modest at 350%. Let's say we do 200% gain from the price of the halving. So let's do 58. So 200% of 58,000. That would add an additional $116,000 to the price. So that leaves us at a modest $174,000. Now, if we were to do some moon math and okay, so what would the market cap be? I'm going to leave that for another stream. You know what? I'm going to put that in the Patreon. Yeah, I'm going to do that. So what would that market capitalization be if the price was $174,000? And let's say that's somewhere next year. Then we could extrapolate that and use the same ratios of, okay, well, where's Ethereum at? And then we could use that to see, well, where's Solana going to be at? And then, oh, man, that's going to be so fun. That means money's being made. If Bitcoin is at 175K basically, oh yeah, all these other altcoins are going to be doing very, very well at that point. But so the key is this is to look at the duration and get like a decent understanding, because once again, this is only 365 days after having. This isn't to the peak, right? This is key. This is only tracking just the year after. So basically, you're just saying like, hey, can I just stick around a year after having? The probabilities are in your favor to make money here. You just got to stick it through. Now, if you want to look at the deviations and the different scenarios, so let's kind of see if we can zoom in on this. Here in black is where we are, so we're pretty flat since the halving. But here in green, we're kind of in a similar position, and that's, the last cycle. And when, we got to be about like 4 or 5 months after the halving, we started to pick up a little bit. Now, we were a little bit more of the opposite ilk in the halving before that. And this is 2016, where we went down. So, price went down considerably, about like 50-60% from the halving price. So imagine if that happened. Like, would you be able to stick around? You'd be like, oh, my heart. Oh, no, I'm losing my, because your alts probably would go down 60-70%. Some alts have already gone down 60-70% from their prior peak recently from March. Pulse Chain, PulseX, things like Say, Celestia, stuff like that. Ruin, IMX. So altcoins have gone down that amount. Now, for example, Bitcoin had lower market capitalization, like how some of these market caps are for some of the altcoins here. So yeah, the volatility is in the game. So we have a live example of, okay, something that was lower in market capitalization, like how Bitcoin was in 2016, and it came out with an incredible outcome, and that's just from the halving. Imagine if you would have DCA'd down here, you're 350% from this point. But imagine if you DCA down here, you probably double that number. So you probably get a 7x. So I'm trying to frame some things in your mind to kind of help y'all do some moon math. Like, okay, like 7x is maybe in the cards for some of these altcoins, that's incredible. With the time duration of a year, come on now. Stop it. Where else are you going to do that? Only in crypto, baby. So with that being said, if we look how we're flat, and the key thing is this, like we really start to get some real like material gains. Even if we're looking at these two different data points, kind of like we're talking 8 to 9 months from the halving. So where that would place us at the end of the year. Like you can see how we're several standard deviations of this level here. And it's like, that's a noticeable gain here, which is pretty nice. That might just be like a double. But once again, a double from 58,000 would put us over 6-figure Bitcoin. And that alone is going to get so many people excited to really come into the market. And that's why you see a continuation of, you might have some resistance at that point, but then you see a continuation of prices just keep going and going and going. And that's when everybody gets really excited. That's when the altcoins are going to be outpacing Bitcoin significantly. So that's a good piece of information to have for getting an idea of time and incorporating that into price. So let's keep going. We're a third of the way through this report. Now, getting expectations, or I guess you can say analytics on down draws. Let me see here. Let me see. So will these technical analysis videos be available permanently? Thinking of upgrading? Yes, they will be. So, they're going to stay permanently for people that are Volta Crypto executive members. I'm kind of giving everybody a taste, here, this month, but I'm going to reserve a lot of the rest of the stuff for the executive members, but I also am going to keep some things over in the investor class too. So, but all the details are going to go to the execs. That's just how it goes, man. But I appreciate everything that, you've been a part of this journey for a while. So let's keep on trucking. So with that being said, let's see here. Sergio C, what up? What up? Glad you're here for sure. Y'all leave comments, leave y'all's thoughts as we're going through this, because I definitely need to make time for a Q&A at the end of this, because y'all need to definitely tell me how y'all are thinking and how y'all are feeling. All right, so let's continue on. So yes, there's down draws in the bull market. Oh my gosh, like that's part of being an investor in crypto. Volatility is the price you take or the price you pay to be in the best appreciating asset class, to the downside, but also to the upside. Now, let's read this. In 2024, the uptrend has also experienced relatively shallow drawdowns. Compared to all the other cycles, this is cool. Like I'm saying this is a smoother journey compared to before. So if you want to look at this, we are in a smoother journey trekking up compared to any other period of time investing in crypto, if you're looking at Bitcoin in particular. Now, all coins are a little bit separate story. All coins are going to look a little bit more like this with these fluctuations. But, with down draws of like 70%, 63%. But I digress. But let's keep on reading. So the deepest correction since November 2022 has basically, been a pullback of 20%. Now, previous cycles, we're looking at deeper corrections within the range of like 25 to 35% in 2016 to 17. But things were like 50% correction to 63% during the 2021 cycle. So each cycle is going to be a little mixed bag that looks a little bit different. As you can see, this is looking something like this. Now, this doesn't mean that it's going to be the exact same type of price action, but it looks very similar. Like we were to cut this off like right here, this looks very similar to that point, which, if you try to extrapolate that out, you're like, oh, we're going to do this. We're going to find out. I'd be happy if we get even something like this where we chill out for a little bit and then we go. But nonetheless, all of these are going to, the supply and demand dynamics of Bitcoin still is going to be intact. That's something that can't change. And once again, the whole market is going to benefit from that. So the compression is something that is happening through time, is what we're noticing. As the market cap gets bigger for Bitcoin, it's compressing the volatility to be less volatile. But to the upside, we're going to experience most of that volatility, hence what a bull market looks like, since we're clearly in the middle of one. So that's good information to know for future bull markets. Now, this one's pretty dope. I like this chart here. This is looking at the realized volatility. So let's talk about the difference between realized and unrealized. Realized is basically saying, hey, I bought something at a certain price. I'm actually selling something at another price. So I'm going to realize that gain. And the difference between that price is going to be volatility. So for example, if somebody's buying something at an extremely low price, they wait a good amount of time, they buy it at a much higher price, that's going to be a nice realized volatility, because they got a higher percentage gain. Versus when people are kind of trading back and forth, you may buy something at a moderate price and then you sell something for like a little bit of gain or a little bit of loss. That's going to be a compressed volatility. So what we find out, this green line, is the realized volatility increases significantly when you are really hitting the head, moving into a large scale price movement in a bull run. So from the previous cycles, you're looking at realized volatility of 120 to 150%, which that is pretty nice. And we see that go up and through the top. And people realize that volatility, and it kind of goes down once you get into the bear. Same thing, you're seeing realized volatility of 80 to 100%. Now this is trickling down, but once again, we're not even at 60% realized volatility. Just with us getting back to all-time highs, we're touching base at 40 to 55%. This is something to think about. So, and this looking at an aggregate over the 3-month time scale, the 6-month time scale, and the 1-year time scale. Now, the 1-year time scale is something to really pay attention to too. So not, take out all the noise. What you find is when the 1-year time scale is actually trending up, that's like solidifying that, yeah, you're in a bull run and you're like, really in that second half of the bull run. For example, you have moments of time where it's choppy up and down, but just in general, when it's tilting and facing up, even if it's a little bit. So for example, here, and example here, those are all signs that, okay, you have positive price action coming along the way in the subsequent time period after. Now, what do we have? We finally have a period where we flattened out and we slowly start to see this curving up for the first time this cycle. This is a beautiful thing, because in this next year, oh man, We might get some choppiness where it kind of goes up and it comes down and it goes up, but that's still fine, as long as we have upwards trajectory, which we do have for the 3 month, we have for the 6 month, and then we have for the 1 year. This is very key. A lot of people aren't able to see it or understand this metric. I'm hoping I did a good job of explaining what this means to us, because that means the volatility to the upside is going to increase the deeper that we get into this bull run. That's how that works. So that's a really, really good sign. Now, we can look here, and we're just looking at, Bitcoin market cap, realized cap valuation model. And, we're looking at divergences. So, we're going to go ahead and take this metric. We're looking at the realized cap for Bitcoin. Basically, anytime that we undershoot this and go under the realized cap for Bitcoin, that's like a huge, like, take all my money. Like, everybody is in loss. So let me go ahead and get all this low cost basis Bitcoin or crypto. Let me just boom. So this is an easy way to spot the bear market. We did it here in the Vault of Crypto. I was showing you guys these charts, nonstop, for those that were a part of the group. Now we're above that. Now the key is, what is the difference in, I guess you can say, the divergence above the realized cost basis of the market? So, the Bitcoin realized cap currently is just right about $600 billion. And, there's a lot of people that are in profit off of this market cap. Now, this is key. As this is trickling up, you want to see, okay, how high above it are we? So that means we're going to have a large amount of unrealized profits. So when it's unrealized, that's kind of like, hey, a ticking time bomb saying at some point people are going to realize this and we can go down. And so that's something to kind of think about. I really want to hone in on reading the last part of this. So historically, the spot market cap has traded near or below the realized cap during the late stage bear market. So like these identified points here, here, and here, signifying that the average coin is held at an unrealized loss. We can also identify periods where the market cap diverges higher than the realized cap during uptrends. So key thing, if it's above it, just know that you will sustain an uptrend. And that's key. So signifying that the average coin is holding an increasingly large unrealized profit. So, we can actually use the NUPL, so the net unrealized profit and loss, to get a little bit more of a, I guess you can say, a oscillator of this same exact metric. So we just want to kind of keep this in mind. What is positive is to see this growing consistently, but at some point, like people are going to take those profits, and we need to see, okay, when do we kind of diverge or kind of start, stop trending up, and then we start to maybe trend sideways or down. But as you can see, I don't know if we zoom in just ever so slightly, if we can. Oh, is it going to let us get over there? I don't know if y'all can see that, but if we pay attention, it's slightly trickling back up, which is really, really good. So, yes, sir. Now, the NVRV ratio, we talked about that plenty. So, anytime that you hold a value above 1, this indicating that, once again, there's a large amount of unrealized profit in the system. But once again, we're nowhere near where we were. We had a reading of dang near almost 3.5%, 3.5 standard deviations of the midline. And so once again, this is going to improve the profitability recovering off of the bear. And this is looking strong. We're just trickling up a little bit higher and higher as the bull market goes. So that's a simple way to understand that. Now, percent and profit. I know this is a lot. Like, what we'll do is I'll show this one and one more. I'm going to leave the rest for Patreon. This is going to give us a good read on duration and when we start to hit like certain resistances in a bull. And so let me explain. And I'll start by reading the paragraph. So by assessing the cost basis of each coin, the overall Bitcoin supply can be grouped into those held in profit and in loss. So from this, we can define the percentage of the total coin supply held in profit, which tends to oscillate between extremes as a gauge of overall investor profitability. Okay. So what does that mean? This is basically telling you how many people are in profit, how many people are in loss. Putting it simple. You have a mean, so a midline here in green saying, on average, give or take throughout the lifetime of Bitcoin, about 74% of people are in profit through the years, which is great. Now, one standard deviation below that is 58% of people are in profit. So that's almost like half and half. Like half the people are in profit, half the people aren't. But that's rare, you know. And so in those rarities, you see that we dip below that and we have some low readings. So those are great times to DCA. So once again, another metric to help you know, okay, when is something undervalued and when do we start getting overheated? Now, in bull markets, understand this, we tend to stay overheated for long periods of time. Like, so up here in gray, this is letting you know the times where we've hit that point where 90% of people are in profit. And so we have 1, 2, 3, 4, 5, 6, like basically 7 taps where there's a lot of people in profit. But what do you find is once we kind of get up to like dang near like this 99% profitability, what does that mean? We're basically making new all-time highs at that current point in time. And then so what do you have? You have regression. So you had time periods where we dip back and we reset. So, you know, what we experience is like a small version of what this looked like back then and there. And what we just experienced was something like how we experienced here in 2020, where, you know, we came up in price. I don't know if y'all can see that in gray. We came up in price, starting to tap on those new all-time highs, and then we came back down. We chilled out for a couple months, and then we went back. But then again, as you can see, it plays around up here, not just for like a month, like for several months within the bull run. So we just tapped it one time and we're already starting to get at a higher valuation right here. And then we've come back a little bit lower because this is no longer us being at 73K. But what we're saying is don't get scared when we tap all-time high and then we come down for a little bit of time. This is normal in a bull run. Okay. So a really great chart to give us some context on how this thing works through time. Okay. Ethereum. So talking about some supply issuance, really, this is just showing how it's now curved off and slowly becoming deflationary through time. That's the easiest way to kind of look at that. So, well, yep, once again, 27% of circulating supply is staked in Ethereum. That's a nice dynamic to have. You know, a quarter of the coins are being staked. That's pretty good. And increasing. So increasing here, increasing in circulating supply. That's what we call supply constricting on two sides. That's good for price. Wink, wink. Bitcoin don't got that dynamic. So yeah, supply burn with all like this is once again getting into the weeds, but then we'll stop here. So Ethereum. Let's talk about good old Ethereum. Now, Ethereum price performance metrics, once again, based off of the halving. Now, let's read this. Ethereum has maintained its position as the second largest asset. So it ain't going nowhere. It's going to be here for some time. With that being said, since Ethereum's protocol had its Genesis block in 2015, it has tended to experience market performance much similar to Bitcoin during its earlier growth market cycles. We can see both heightened volatility, of course, and greater down draws like how Bitcoin had when it was just first coming out. Larger upswings in the Ethereum price following Bitcoin halvings. In the 365 days after the Bitcoin halving, Ethereum has seen more divergent market performance. So with the 2016 cycle drawing down 45%, but before rising, here's the key, 3,400%. While in 2020, the price more than doubled in the immediate months after the halving and continued to rally to 2,150%. So that's 21x. That's basically 34x. Wow. So those numbers look a little bit better than Bitcoin, right? They'll stay better than Bitcoin, right? Because it is a couple cycles behind in smaller market. That's how all this works. So we find ourselves, and that's the key, like from here, yeah, we could go up, but then also, yeah, we could go down. And that takes us into the fall of, right, 2024. But the key is this, stick through the full 365 days after halving. So the goal is you got to make it to April of 2025, because what do you find is a lot of the gains, like, yeah, like, you know, we may have doubled even from like this cycle here in 2020. So we may have like doubled or even got a 2x. And that's like 8 months after halving. But a double is nothing in compared to what are we looking at? You know, 20x and 34x. So hold your horses, y'all. Like really, so if we match this up, because this is gonna match it up and basically, put the symmetry as if, we're plotting out this is, potential routes for, Ethereum in this cycle. Even if it does a fraction of this stuff, even if, at some point we even get down to say, all right, cool. Even if we do a 5x, like we ain't even got to get a 20x or a, whatever. We ain't got to get a 35x. Even if we get a 5x or a 6x or 4x for Ethereum, since it is getting larger in market cap, that's going to be pretty dang impressive because, 5x from $3,000, that'll be very nice. That'll leave us at $15,000 Ethereum. Where does that put post-chain? If you got, PulseX and post-chain bags and PHEX bags, where does that put some of these other altcoins that are loosely attached to Ethereum? A lot of coins are going to be liquidity bonded with Ethereum. This is very important. That's why, if we dip lower, go ahead and buy that dip because we are in the middle of the bull market. It's dangerous to buy the dip when we transfer over into a bear market, right? Because you'll just keep throwing away your money and price going to keep dropping on you. But with the aspect of time, we are in the middle of a bull run. There's so much evidence to show us that. And if you're worried because okay, we came off the all-time highs, it's because you simply maybe don't understand the cycle fully. So hold your horses. The mile markers that you got to have in your head is okay, can I make it to the end of the year of 2024? Okay, great. And then can I make it to the end of Q1 2025? Then do your assessment. But until then, summer stack, baby. So I'm gonna leave it here. Now let's go ahead and do a Q&A. What questions y'all have? I might be able to, do some charting if y'all need it. But Bitcoin is, that's chilling. About $67,600. Ethereum at $3,100. Not bad. On today, what's pumping? Anything? Let's see. Mantra, near protocol up 8% for the day. Near something I'm stacking. Yeah, looking pretty decent. Y'all got anything before we jump off? Keep the eyes on the prize is what I'm saying here in the stream, guys. Get to the end of the year. Don't be jaded. Don't let people stop you from buying good assets, right? Keep the conviction and then reassess at the end of the year. And then we reassess after Q1 of 2025 for sure. So that's the game plan in the vault. To choose or not to choose is the question. Y'all got anything? I'll sit here for maybe another 2 minutes. Yeah, here's y'all's chance if y'all have anything. Let's see what else we got here. Sui, okay. Let's see on the 7-day. Yeah, Celestia, not coin. I have no clue, but I'm not even thinking about touching that. Over 7 days, Mantra. Let's look at Mantra. Okay. Circulating supply. Oh, almost all the supply is out. Interesting. Let's put that on log scale max. So it's been through some things. But it's come back pretty strong off of that liquidity push in January. Does this have anything to do with the ETFs? Y'all know this coin? Mantra. This is going to get a whole research night from me within the next day or so. Dang, up 61x. That's crazy. Now the question is, hold on now, where can you buy this? Don't see it on Coinbase or Kraken. This is probably China money over here. Or, east of the pond. Let's see. Yeah, just Binance. Toko Crypto. I never even heard of them being it. Yeah. Yeah. Doesn't seem. Can you get this on a DEX? I don't even think so. KuCoin. Oh, okay. You might get it on KuCoin. Interesting. But what does the volume look like? Oh, there's volume. 1.6 mil. Okay. We got a question. Sergio, see, how many X's do you think the post meme coins will do if Ethereum does pump towards the end of the year? And to be honest, sky's the limit because the post meme coins are going to basically go off of what post does. So I would say, not all meme coins are created the same. in post because there's hundreds of them. The ones I would say that have been around for at least like 4 to 6 months, or no, I would say longer than that, like from the like 6 to 8 months at least, and that have an established brand already. Whatever post does, they may be a beta play of 2 to 3x better of whatever post chain does. So for example, if post chain does a 20x, then these might do a 40x to 60x, if that makes sense. So it's hard for meme coins. It's really hard to give a good sound piece of comment on them, simply because they're so sporadic and they can do things that you can never imagine. Is DeFi Kingdoms dead? I don't know, but personally, I'm not putting no more money into it. I still got my bags from it, but I don't see that. I don't think it's the best option out of all the options that we have to choose from to put money into currently. So they may do a little something, but it's not going to be high priority for investment in my identity, my prognosis. So my identification is not telling me that. So is it dead? Psh, it's not performing as good as a lot of other things, is what I'm saying. So let's see, what else can we look into? Yeah, really, I did pit stop in the last stream and talked about Celestia. I really think it's at a good price here at $6 and some change. Now, yes, there is going to be some inflation that's coming out, but if that inflation is met by demand, that's actually a really good force multiplier to the upside. So, yeah, that ecosystem is going to keep expanding over there in the Cosmos ecosystem. So, pretty dope. Yeah, so it's 68% off the all-time high. But this thing really, like, as new layer ones, it's got a lot going for itself. Now, just more people add to the network is going to get the job done for this coin. This is like in the top, 50, I think? What is this? Coin number, or it's close. Where is this? 68. So, but I think this is going to be a top 50 coin within the next 365 days. What crypto do I think is canary in the coal mine? Let me think about that for a second. Canary in the coal mine, like things that many people maybe don't talk about. I've been saying this for a long time. Metis. So Metis, it's a layer 2 solution. But when it comes to volatility, when Ethereum does well, oh man, it really likes to play well to the upside. And a lot of people, they're not really on this layer 2 because there are larger layer 2s like Arbitrum and Optimism, but it's just low enough market cap to do numbers, but it's just high enough market cap to get the recognition of people not thinking like it's some shoddy layer 2. Like if we scroll down, let me go ahead and type it in the search. So yeah, I would say Metis. I've been accumulating Metis for a good amount of time, even since last cycle. So yeah, so 229, but that dropped significantly because of like it really got smacked. I'll put that chart up, when Bitcoin came off the all-time highs. But same thing, like in October or September 2023, they're like, what the heck? And then out of nowhere had like these god candles of like Ethereum players coming over to the layer 2 and like sent it up like 3x, 4x out of nowhere. And nobody even know. Like it was even more than that, I think. It was like 8x out of nowhere. Nobody even noticed. But I was like, ooh, thank you. Right? So yeah, it's ranked number 229. Let's pull up the chart for Metis really quickly. Oh, I think I have it already. So or maybe not. Oh, here we go. Yeah. Question: what do I think of ADA? Poo poo. Better networks, better use cases, for compared to what they're saying that they're trying to do. No user activity compared to like a lot of other networks. People are just resting on the laurels of Charles Hodgkins, which he's a smart dude, but he ain't putting out. So I'd rather choose post chain. I'd rather choose things like Solana, other stuff. But once again, kind of putting this, and the thing is, using the Hatter for this thing has been beautiful. This isn't the full price chart because this does go back into 2021. But like everybody like, altcoins, we hate them right here. And then out of nowhere, we have these beautiful compilation of candles where we see Metis, right? Which like here, it got Metis into like the top 100 easily. But we see Metis do a nice 10x from a layer 2. Like this ain't no meme coin. This ain't no like, what the heck? What is this? Like it's a layer 2 on Ethereum. So 10x under this duration from September, like end of September to January. So like in a quarter. Oh, sign me up, baby. So we can get some, hopefully we get some little support from these areas here, but this is the canary in the coal mine. Let's go ahead and do some ghost bars, even if we have something like that happen, right? With the bags that, you can slowly start to accumulate while we're here at $40. Like, I see this being something that could, definitely be, anywhere between $400 to $600 without a problem. But once again, with this type of movement, we get some type of support. Do we have this golden ratio tap? Not quite. So yeah, but we are kind of getting to this 0.5. Let's see if we keep going down to this golden ratio. I feel a little bit more, more gun ho to like try to accumulate this a little bit more. If that does happen, we're well above the 12-week EMA. But we just need another liquidity push, which once again we know is going to happen. Like, why don't you just go ahead and lock in your 10x on something that it's just like, look, this is attached to Ethereum. There's no doubt about it. This is layer 2. It's like getting Arbitrum or whatever, Optimism, which those price charts just aren't as explosive because they're larger market cap. So that's my canary in the coal mine. Metis ecosystem, which I might have to DCA into some of that here probably in the next month for sure. So catch this little dip that we're on. Cool, you guys. So cool. Definitely keep locking in. This is what we're here to do. Trying to get this good quality content for y'all so y'all can really not just do the surface level stuff, but really dive in. Not too crazy, but we're really getting a full understanding on how this works and how to go about it. Once again, Patreon. So please consider, there's a lot of stuff that we're doing in there that just ain't going to be on YouTube. You got to invest in yourself to really get the butter from the duck. For example, like, we can see people are coming through. If you want to start off on a free account, do that. But there's certain things that the higher tiers are going to get that are really going to help to the knowledge in your growth. So come through. Patreon is where it's at. Let me see here. Yeah, Patreon is where it's at. You guys need to hop on in. Y'all go ahead and hit the link in the description. And it's on you, right? It's on you. If you want to get the benefit, come through and do what it do. There's 3 options for y'all. So once again, we have the Explorer. And this is saying, hey, I just want the basics. Go ahead. Everybody gets access to the chat. But at the end of the day, you'll get some alerts and you'll get 1 video a month of just real market thesis understanding. I would venture to say you want to, come into the VLC investor, right? So this is kind of where you can get a little bit more weekly updates. And then at that same time, you're going to get beginner guides. So to really help you guys understand the basics. If you're like, look, I kind of want to get past this little hurdle of understanding, like this is going to get y'all the basics down for sure. And then for those that are like ready to rock and roll, really at it like on a weekly and a daily basis, really getting the butter from the duck, get the executive tier, y'all. Like this is where we're sharing the most information. So you're going to get consistent technical analysis on Bitcoin, Ethereum, and a lot of other coins that we have in the sample portfolio. You're going to get DCA alerts. So I'm like, hey, like now is kind of when we want to looking to jump into this, and it's at your discretion if you want to take a look at it as well. But the key is this: you're going to get the exclusive package of invite only trading view indicators. So all that stuff that y'all see me using on stream, y'all got access to all of that stuff that's proprietary only to those of us that are in the vault of crypto. And so we're going to do fireside chat. So, where you get to ask questions, a Q&A of just like, really, really, really good deep value content that's like not here on YouTube. Like I just unfortunately just can't do it no more. I've given so much away for free. When you're serious about something and you see the value, this is chump change, especially when it comes to when you're making, what we're going to be making in this bull market. So, and I want to be your helpmate. I want to be your co-pilot to getting you to where your goals are, where you're trying to go. And so definitely hop on in, y'all. Let me throw this in the chat because we ain't stopping. We are on go. And now is the time to press the jets, like for real. If you're tiptoeing, you're going to wish you didn't, So cool, man. I appreciate y'all for coming through. I'll be popping on stream here in probably another day or so. Look out for the notification bell. And if you haven't subscribed, consider subscribing. We got a lot of good stuff here. So until next time, I'll talk to y'all in the next video. Peace.